correctly bought gold because they said, well, that's the original store value. However, the second reality is that we had to suddenly protect the dollar to make sure it was going to be the world's reserve currency, because if that was no longer exchangeable for gold, then a country that was still in the gold standard could become the new reserve currency. So what happened? Wall Street built a bunch of new products to make sure that the dollar became the accepted standard. And over that ensuing 10-year period, it was money market funds were created, CDs, futures, ETFs, and it was successful because the dollar remained the global reserve currency. And today it's now 80% of all financial trading pairs. In 2025, there is a similar evolution taking place, and it really started with stablecoins, which is that the dollar, which was already now is almost as valuable as a bank like JP Morgan, has 313,000 employees. So there's a lot happening. There's a lot of benefits that come from tokenization, and I think that that's the big unlock that's coming.
Yeah, totally. We're a fiduciary, and I know you're close with my partner Seth. We talk about this all the time. As fiduciaries, I think the equity markets globally have about 127 trillion in market cap. I think fixed income is about 150 trillion. But as a fiduciary, given the option and if liquidity was the same, I always have to buy the token rather than the legacy fiat instrument because I can manage my risk on weekends and nights. And so I've always been of the opinion, slow, then all at once, everything has to tokenize because I need to trade it. How do you agree with that thesis? Do you think that's how it's going to play out? And what does that mean? There's plenty of blockchains. Obviously you are drawn to Ethereum.
It's probably going to be 70%. So increasingly, almost all innovation and growth is native digital, and yet we're using geographically defined currencies, and we're trading instruments only 5 days a week with specific market hours, even though during those market hours, 99% of all the trading is already electronic anyways. I think one of the challenges as we tokenize is, of course, going to be making sure there's still the same liquidity that's available, because we know one of the glitches in crypto is liquidity is not universal. And so we do want to make sure prices are correctly reflecting a deep and full market whenever we see a price posted options, because both Bitcoin and Ethereum are not mature platforms. Their best utility and growth and innovation are in the years ahead, right? So we're 10 years in, but there's more growth in the future. The percentage of market share of crypto of total assets is so small that we know that mathematically that's true. Whenever when you have something that has a hyper growth on ramp and you're discounting the future, it's going to be very volatile. So does Ethereum's price going from 4,800 to 2,800, that is a staggering decline, but that probably is a minor change in 2030 fundamentals that is being priced and repriced by investors. And that's
of 1010.
I'd say if someone wanted to say, why did crypto diverge from equities?
Yeah.
That's, I think, a big role, because in the past 6 weeks, nothing has actually fundamentally explained why crypto should be underperforming risk assets. Because the S&P, of course, has had a drawdown, but the S&P continued to rise for another 20 days. The S&P didn't peak till the 29th. So that divergence has to reflect either a change in how market function in crypto, or was there an existential new risk? The only new existential risk would be like if quantum innovations came along, but there hasn't been that. So
you think it's
well, I think you're spot on, Chris. Like when someone says, what is Bitcoin? I think everyone really accepts it as it's a store of value, a really good way to store value. And that's accepted today. In fact, someone might say that's like a Lindy effect, that people believe that. When we first started writing about Bitcoin in 2017, and digital gold was one way to sort of argue Bitcoin's value, it was not accepted because many people said, well, come on. I mean, it's just code. I mean, how can code store value? Or why can't it on the blockchain? So you can't really do that on Bitcoin. So you have to build it on a smart contract, L1 or L2. And the reason I think Ethereum is going to be one of the leading platforms is, number one, its sheer size. It is by far much bigger than the number 2 or number 3 L1s. It has a huge and growing developer community that is really dedicated, and it's global. So I think it's a true, robust community with actual known values. And it's a neutral blockchain with 100% uptime. So I think that this becomes one place where it's going to be easier for people to create, is that there are so many DATs that it's not clear what differentiates each strategy of a DAT. So I think maybe to level set, I could explain MicroStrategy and BitMine, and they're pursuing different strategies. MicroStrategy has 3% of the Bitcoin network. They've become so important that I do think that they have what I call a sovereign put. We know sovereign funds are buying a lot of Bitcoin. They continue to buy it. So as much as Bitcoin has languished, it's really, as you know, shifted hands to basically large holders now. And MicroStrategy owns so much Bitcoin that if the US government and the developer community and the DeFi community, and really defining parameters and identifying projects and prioritizations and even alliances. And that's where BitMine, with 3% of the Ethereum network, is essentially, in a way, becoming part of that bridge. We are really trying to align ourselves very closely with the Ethereum Foundation and a lot of developers, but also acting as that conduit and idea generator for Wall Street. So that's how we're trying to accomplish this as a DApp. But of course, you should stay tuned, because that means by necessity, we're going to have to also spawn and create additional businesses to support all those functions. And I think that's why BitMine, US Treasury friendly, Wall Street friendly, but it's an example of how we're trying to create standards that are really not, we're not trying to optimize for like time to market, right? We're pretty slow to announce a staking solution.
Yeah.
But we wanted to be really thoughtful about it. And of course, we also wanted to make sure we weren't going to have a negative impact on the staking, on actual staking itself.
Yeah.
Because, you know, with 3.6 million Ethereum, I mean, it's a huge amount of ETH to move.
Yeah, 100%. But that should drive some nice sustainable yield, probably around 3%. You also made a strategic investment in Orbs, or 8Co, which is the WorldCoin DAT. I think it was like a $38 million stake. Can you explain how that ties?
Orbs.
Love it. Yeah, big fans of that project as well. Tom, so you know, you have Maven, you're doing strategic investments, and it sounds like you've got plans that you can't really talk about. You also announced recently a dividend. Can you talk us through that calculus?
Yeah, glad to. We announced an annual dividend, and it's an operating dividend of $0.01 per share. Now, it reflects BitMine's commitment to focus on shareholder return. And this is a dividend. It's going to represent a payout that's less than 1% of expected earnings. So of course it's sustainable. It doesn't require borrowing any money to pay the dividend. But it convertible offerings. I mean, it ended up, you know, being a meaningful percentage of how they raise capital. So it's a future option for BitMine, but for now we would prefer to keep the company's balance sheet super clean. Again, a company is just straight equity funded.
Yeah. So I wanted to get into MNAVs really quick. And right now the entire DAT space is pretty much, most DATs have an MNAV below 1, meaning that the price, the market capitalization of the stock is less than the value of the underlying crypto. It kind of puts DATs in a difficult position because it's not a great time to issue new equity to buy tokens. How do you navigate this situation where the MNAV drops less than 1?
Yeah. Well, if a company has their MNAV below 1 is too high, they have to right size their expenses. Then they have to, secondly, convince markets that they are shareholder friendly. And that either means, a roadmap to what they're actually doing. And it shouldn't be maximizing staking yield because, I think that makes investors nervous because there's no such thing as a free lunch.
Yeah.
But it could be a shareholder return plan. But if they are a small company and they're not growing, that is so there's probably close to 55,000. And in our study that we did at Fundstrat, 90% of IPOs and spinoffs fell 90%. And of those, half of them went to zero. So meaning most companies fail. And so what we're seeing in DAT world, just like in crypto, is that this Darwinian process is happening very quickly. But in order for mergers to happen, it's the seller has to become realistic. That's, I think, the problem, because a seller would say, well, in June, I was just at this price. Why do I have to sell now? So I think that's the sobering of that process is probably what's holding up M&A, because of course there's plenty of buyers out there. But one of the